Everyone is asking the same question right now. Is the massive run for gold and silver finally hitting a wall? We've seen prices climb higher than most people expected this year. It's been a wild ride for precious metals since January, but now the charts are showing something different. You can feel the tension in the market today. Investors are staring at their screens and wondering if they should sell. April 2026 is shaping up to be a defining month for your portfolio. The momentum we saw last month isn't as clear as it used to be. Look at the way gold reacted to the latest inflation data. It didn't jump the way it usually does. That's a signal that shouldn't be ignored. Silver is also behaving strangely lately. It's historically more volatile, but it seems stuck in a tight range. Does this mean the big money is waiting for a dip, or is this just the quiet before a much larger move? Let's break down the actual numbers for the next 30 days. We need to look at the psychological levels for gold first. A lot of traders are focused on the heavy resistance just above current prices. If it can't break through that ceiling, a pullback is almost certain. But how deep would that drop actually go? Most experts are pointing to a specific floor that needs to hold. If we lose that support, the rally might be officially dead for the spring. Silver has its own set of problems to deal with right now. Industrial demand is shifting, and that impacts the price floor. You might think the physical shortage would keep prices sky high. Honestly, the paper market doesn't always care about physical supply. It's a frustrating reality for many long-term holders. What are the realistic targets for silver by the end of April? Some analysts are still calling for a massive breakout. Others are warning of a 20% correction before May. It's hard to know who to trust when the market is this choppy. Have you noticed how quiet the big banks have been lately? They usually talk a lot when they want you to buy their narrative. Right now, the silence from the major institutions is deafening. They might be positioning themselves for a major shift. We are seeing a lot of sell into strength orders hitting the floor. That usually happens when the smart money thinks the top is in. But gold has a habit of proving the skeptics wrong. It's done it several times over the last 2 years. Every time people say the bubble is bursting, it finds a new gear. Is this time actually different? The geopolitical landscape is still very unstable. That usually acts as a massive tailwind for metal prices. But even a tailwind can't save a market that is overbought. We have to look at the technical indicators very closely. The moving averages are starting to flatten out. That's often the first sign of a trend reversal. Let's look at the specific price targets, starting with gold. We have a very narrow window to watch this week. Most traders are looking at the 2,800 level. It's been a massive hurdle for gold over the last few weeks. If we can't close above that, a sharp drop is likely. The next major support sits much lower than you'd hope. We're talking about a potential fall to the 2,600 range. That would be a painful correction for anyone who bought the top. Is that where the buyers will finally step back in? Historically, gold finds a lot of interest at those psychological round numbers. But the silver market is where things get even more interesting. Silver has a tendency to overshoot both the highs and the lows. Right now, it's fighting to stay above $35 an ounce. If that level fails, the slide could happen very fast. Some analysts are eyeing $30 as the ultimate floor. That's a big move down from where we've been trading. Does that mean the bull market is over for silver? Not necessarily, but it means the easy money has been made. You have to be much more selective with your entries now. Look at the gold to silver ratio for a moment. It's been widening lately, which usually favors gold. When silver underperforms, it often drags the whole sector down. Are we seeing a lack of industrial demand in the short term? Manufacturing data for April isn't looking as strong as expected. That's a direct hit to silver's primary use case. Gold doesn't have that same industrial weight on its shoulders. It moves more on fear and currency fluctuations. And right now, the dollar is showing some unexpected strength. A strong dollar is usually poison for precious metals. It's a simple inverse relationship that's held up for decades. If the dollar index keeps climbing, gold will feel the pressure. Are you prepared for a month of sideways trading? A lot of people lose money just trying to force a trade. Patience is going to be the most important tool this April. We should talk about the central bank buying spree. They've been the biggest buyers of gold for over a year. If they stop their purchases, the floor could fall out. There are rumors that some major banks are slowing down. They might feel the price is just too high to keep adding. If the whales stop buying, the retail investors can't hold the line. It's a scary thought for someone holding physical bullion. But we also have to consider the upcoming inflation reports. If those numbers come in hotter than the forecast, gold flies. It's the ultimate hedge against a devaluing currency. People run to gold when they lose faith in the system. And there's still plenty of reason to be skeptical of the economy. Debt levels are at all-time highs across the globe. That alone provides a long-term bull case for metals. But the short-term picture for April 2026 is much messier. We are seeing a lot of wait-and-see behavior in the pits. The volume is starting to dry up at these high price points. That usually leads to a volatility spike in one direction. Which direction is that spike most likely to take? If we look at the historical data for April, it's often a flat month. Investors tend to pause before the summer volatility kicks in. But this isn't a normal year by any stretch. We are dealing with a unique set of economic pressures. Interest rates are still a major wildcard for gold. When rates stay high, the opportunity cost of holding gold rises. Gold doesn't pay a dividend or an interest coupon. It just sits there and looks pretty in your safe. That makes it a tough sell when bonds are paying out well. Silver is even more sensitive to these rate shifts. It's been struggling to find its footing since the last Fed meeting. Many traders are betting on a mid-month dip. They want to pick up silver closer to $28. Is that a realistic price target for the next few weeks? It depends entirely on the manufacturing sector's health. If the factories are slowing down, silver will follow them. There's also the issue of mining supply to consider. We haven't seen any major new discoveries lately. In the long run, that scarcity drives the price up. But markets can stay irrational for a very long time. Just because something is rare doesn't mean it goes up today. You have to watch the daily volume for any signs of life. Lately, the volume on the major exchanges has been thinning. That's a classic signal of an exhausted trend. The buyers are simply tired of chasing the highs. They want to see a pullback before they commit more capital. Are you one of those people waiting for a better entry? It's a smart move if you're looking at a long-term horizon. Buying at the top of a parabolic move is always risky. We saw what happened back in 2024. The prices spiked and then spent months cooling off. This April could easily be a repeat of that pattern. The gold price target for the end of the month is tricky. Most technical setups are pointing toward a consolidation phase. Expect gold to bounce between 2650 and 2700. Breaking out above that range would require a major catalyst. Maybe a sudden shift in the jobs report could do it, or perhaps another flare-up in international tensions. Without a shock to the system, gold looks a bit heavy here. Silver's target is even more compressed for April. Staying above $32 would be a victory for the bulls. Falling below that could trigger a wave of stop-loss orders. That's when the selling really starts to accelerate. It creates a snowball effect that's hard to stop. Do you have a plan if the market drops 10%? Most people panic and sell at the worst possible time. The key is to have your price target set in advance. Know exactly where you want to buy and where you'll walk away. April is going to test the conviction of every metal holder. Wait for the market to give you a clear direction first. Don't try to catch a falling knife in this environment. If gold slips under 2600, the next stop is 24. That's a psychological level that hasn't been tested in a while. Silver could easily retrace all the way to $25. It sounds extreme, but precious metals often give back their gains. They move in waves, and we might be at the end of a big one. Look at the sentiment indicators for retail buyers. Most of them are still very bullish, which is actually a warning. And when everyone is buying, there's no one left to push the price higher. Contrarian investors are starting to look at the short side. They're betting that the hype has outpaced the reality. Are you seeing more gold ads on television lately? That's usually a sign that the top is very close. The big players use that retail excitement to exit their positions. It's a pattern that repeats in every cycle. But don't count gold out for the entire year of 2026. A pullback in April might just be a healthy reset. It clears out the speculators and builds a stronger base. We need a base if we want to see $3,000 gold. Without a correction, the market just becomes too fragile. Silver needs that same kind of breather to reach $40. Is $40 still on the table for later this year? Many analysts think it is, but not without a fight. The industrial demand will eventually return in force. Solar panels and electronics aren't going away anytime soon. They require physical silver that can't be easily replaced. That fundamental story hasn't changed at all. Only the short-term price action is under pressure right now. Keep a very close eye on the 10-year Treasury yield. If it climbs above 5%, gold will likely break down. If it stays steady, we might just trade sideways for weeks. Sideways markets are the most boring part of investing, but they're also the most important for building a position. Are you comfortable with your current allocation of metals? April is the perfect time to reevaluate your strategy. Maybe you want to pivot more towards silver if it dips, or perhaps you want the stability that gold provides. The price targets we've discussed are just a roadmap. The market will always find a way to surprise us. Expect the unexpected as we move through the middle of the month. Watch the volume on the Friday closes very carefully. That's when the institutional traders reveal their hands. If they're buying the dips, the rally isn't over yet. If they're selling the rallies, the top is definitely in. Which side of the trade do you want to be on? The smart money is moving slowly and carefully right now. You should probably consider doing the exact same thing. April 2026 is going to be a month to remember for metals. Stay grounded and don't let the volatility shake you out.